If you're thinking about moving to Madison, Wisconsin, or you're already here and wondering what is the market actually doing this year in 2026, you are on the right video. My name is Dayna. I am a real estate agent right here in Madison, and I help people, especially people who are relocating from out of state, find their footage in this market and actually land a home. Today, I brought one of my go-to lenders to break it all down with me. We're covering what's happening with the inventory, what buyers need to know about this market in 2026, and the real talk on the interest rates and financing, because there's a lot of info out there, a lot of advertisement, but I want you to be as prepared as possible and talking to a local lender before you get into it. First off, before I bring Zach on, I want to talk about what's actually happening on the ground in Madison right now. Because if you're planning to buy this year, you need to understand the landscape before you start scrolling Zillow at midnight. Inventory is still pretty tight. We're coming into the spring, which typically there's more listings. But what I'm seeing is that well priced homes in desirable areas are still pretty competitive and moving fast. We're not really in the frenzy of the 2021 market, but don't let anyone tell you that it's going to be easy peasy when you just put in your first offer. If you are relocating here, especially from a higher cost of living city, Madison can feel surprisingly competitive at that lower price point. So homes are priced lower than what you might be used to, but the demand is real and the good ones do not sit long. A lot of people reaching out to me right now are families with kids, and school districts are their big concern, which makes total sense. So I'm keeping my eye on Middleton, Verona, West Madison, and even places on the east side like Prairie and McFarland for you guys. All of the school options in Madison are solid. It's really up to you and what fits best for your family. I'm also working with a lot of first-time home buyers. And if that's you, I want you to know that there are a lot of options out there. But if you are in that lower price point from the 250,000 up to the 350,000, I do encourage you that condos are also an option. Condo inventory right now is less competitive. Just this past weekend, I was able to get my buyer an accepted offer on a condo at exactly list price. Now, it was raining and it was Easter weekend and there were only 3 showings, but that was surprising. It was a condo in downtown Madison at a very low price point. So, my first time home buyers, I know maybe you're not getting the dream home right away, but there's always a way into the market, into building equity. So, we can get you to that dream home on your second go around. Don't worry, Zach is going to share some financing incentives in just a minute, and I think that will help open doors for you. One of my very first conversations I have with new buyers is about financing. And I don't just mean making sure you're pre approved, I mean really understanding your budget, not just the number you're approved for, but the number that actually feels good for you and your family long term. The payment you can make every month without stress, because becoming a homeowner is exciting and I want it to stay that way when you actually move in. So, the biggest thing I tell my buyers before we start, get your financing in order first, not just because of the pre approval, but so that you understand your budget before we start shopping. So that brings me to Zach and why I asked him here today. Zach and I recently worked on a transaction together with some amazing buyers in Mount Horeb. And what stood out to me right away was that we share the same values, actually listening to our clients and helping them land the home that checks what matters to them most, not just what they're able to get pre approved for. Our mutual clients were actually looking for their forever home. And they were young. They didn't want to move 10 times in their lifetime. And honestly, they were some of the most realistic buyers I have ever worked with. They actually taught me how I should be budgeting better. And they were really able to land the right home for a long term, but in the right budget that they wanted to. And that doesn't happen by accident. They worked very closely with Zach to understand the numbers, to understand what they feel comfortable in offering. And Zach was so helpful with that. Zach is a lender from Fairway Mortgage. He works with a lot of buyers coming into the Madison area, some who are local and some who are making big moves from out of state. So, Zach, I'm really glad you're here. Welcome.
Thank you so much. I'm excited to be here with you.
Yay. Okay. So, first of all, I know let's just get right to the big question that most buyers are wondering when they start to get into the market, and that is interest rates. How are the rates going in 2026? Even if you want to paint a picture on how we started to where we are now and what we can see for the future.
Yeah. How we started is about where we are right now again. So started the year higher, maybe than we would hope, in kind of the mid sixes. Throughout the January and February, started to see rates start to slowly decline and get or improve. And actually, we started to see rates get below six and head towards 5.5. So everybody was really excited. A lot of buyers were coming out, things were moving. And then unfortunately, we actually saw rates increase again with our involvement in Iran. And that's just because things like that end up impacting, in this case, oil prices, but also inflation as a whole, which then bleeds into things like mortgage interest rates. So right now we're back around the mid sixes, but experts are confident and hopeful that once things kind of die down in the Middle East, we will once again see those interest rates start to improve again, get back into the fives, and hopefully be more suitable for people.
Yeah, I remember that. I don't know how many weeks ago it was that it hit that in the
Yeah.
fives, and I was so excited, and I thought that was going to be the bar for the rest of the year. And luckily, I did have some clients under contract who were wondering if they should lock in their rate or not, and they decided to lock in their rate like right away. And then the war started like a week later. So I was like, glad you did that.
Yes. Yes. I had the same thing with people on that Friday right before. So I was happy to be able to give them a call on Monday and say, you guys, you made the right choice.
Okay, good. Okay, so we're all staying hopeful, you guys, that we start to head back to where we were heading in the first place in 2026. So, a lot of people who are watching on YouTube are oftentimes looking to relocating here from outside the state. Now, I know a lot about lending in Wisconsin, but are there a lot of big differences for people coming from outside the state? Like any surprises for any future clients?
I mean, a lot of overlap in the general lending process, but I think one thing people would be surprised about, especially if they're coming from bigger cities and they feel like the home prices in Madison are a little more affordable. And now again, that depends where you're coming from. But even though those home prices might feel a little better, the taxes in Wisconsin and in Dane County specifically are higher than many markets. So yes, the principal and interest payment might feel more manageable here, but I just would kind of tell people be prepared to add, maybe five, six, seven, or 100 or even more to your monthly payment with taxes. Madison is an awesome place. It has so much to offer. I love it here. And everybody I know here is just so happy. And I think we sort of pay for that a little bit with some of our taxes. So I think that's the one thing I would kind of forewarn people just to not be too surprised by.
Yeah, and I'll back that up because that reminds me I have some buyers looking to move here from Utah, and they actually just called me a couple weeks ago to ask me about the taxes because they were a bit confused when looking at budgeting for their future purchase. So that's real, looking at the taxes.
Absolutely. Yeah. And
Yeah.
anybody can look, especially in Dane County, if they're looking, you can just go online to, it's called Access Dane, and you're able to kind of peek and see what are taxes going for this house. And that said, though, that's also a service that as the lender we provide. If you're interested in a home, send the address over. We'll get you a monthly payment estimate. So we can kind of do that legwork for you. But all of that stuff can be known before you ever even see the house.
What type of lending programs are, you at Fairway Mortgage offering this year that's helpful, whether it's for a first-time home buyer or any other type of situation?
Yeah. Well, we have a variety of different income-driven programs. One that I'm seeing more, and it's statewide, but one I'm seeing used more often lately is WHEDA. And WHEDA loans are typically targeted for folks maybe with a little bit lower down payment. They can actually get down payment assistance through WHEDA. But what I'm seeing is some people who would normally qualify for just a traditional 30-year mortgage. If they qualify under the income limits for WHEDA, we're actually just kind of heading that direction for them because the rates are better. So kind of a shift in the market here is that before it was like, yeah, you kind of only use WHEDA when that was your option. But now we're actually seeing a lot more people use it when they have multiple options. So I'm happy that people are, utilizing, being open to trying different products.
Yeah, that is really amazing. I have had buyers use WHEDA before, and my understanding is there's so much funding for it in the beginning of the year, and then it kind of ends or gets used up at some point by the end of the year, right?
Yep. So I mean, the sooner in the year, the better. It's just easier to obtain that, especially the down payment assistance piece. So yes, you're spot on with that.
Okay, cool. What do you see as the most common mistake that buyers make before they start looking for a home, like possibly getting pre-approved too late or just working with the person they bank with? What would be your perspective on that?
I think it's mostly just the waiting as a whole. I think people are waiting for everything to be perfect before they go get pre-approved and start looking at homes. And when I say that, I mean waiting for some unidentified perfect interest rate, maybe waiting for the perfect amount of down payment to have ready, waiting for their lease to time up perfectly with when they might be able to get in the house. So I think just being able to have a little flexibility with some of those things, you'll find that getting into that home, there's gonna be so many more benefits, even if everything didn't time up or line up perfectly. So I guess the challenge for people then is when they wait, what they're missing out on is all the equity that they could be building in that home for the months or years that they live there, as opposed to staying renting or where you're at and actually paying your landlord's mortgage and helping them build equity. So yeah, I think the biggest mistake I'd see is just people waiting for whatever variety of reasons. If they want to get into a home, we can make it happen.
Yeah, and I highly recommend to just get started with your lender. Just get pre-approved so you actually know what's realistic for you. And Zach will definitely run the numbers for you on that. I know some of my clients are really surprised when they get pre-approved for something higher than what they thought they could buy, but it's really up to them on what they want their budget to be monthly, whether it's, their mortgage with all your other bills like the taxes and homeowners insurance and things like that.
Yeah, and what I stress to people early on in the process is, because a lot of people say, okay, I want to know what I can get pre-approved for. So that what they're asking is what's the maximum you can pre-approve me for? And we can determine that number, but what I would rather have people kind of start to have a mind shift towards is, what do I want my monthly budget to be? What do I want my monthly mortgage payment to be? Because just because we can approve you for something doesn't mean that might make the most sense for you and your family. So we want you, and I heard you say this earlier, Dana, we want you to be happy with your home and stay excited about your home. And we want you to be able to sleep at night, right, with your mortgage payment and not feel too stressed about that. So we'll work hand in hand to make sure that all of those numbers match up and make sense for you.
Yes, totally. For some reason, as we're chatting, I'm like, okay, I want to ask you because I feel like I butcher explain this at every closing. If I happen to explain this for buyers, when a
Yeah.
buyer closes on their property, they don't have to
Yeah.
pay like that first mortgage the next month. Is that
Yep.
correct?
Correct.
And why is that again? Because it's part of their closing costs.
So it is kind of hard to explain. You pay for When you pay your mortgage, it's for the month that you just lived in the home. So if you close on, what is it, April 7th, your first payment won't be until June 1st. Now, just because we're not going to collect that payment till June 1st doesn't mean we don't want to collect our interest, but we're not going to charge you for that full month of the principal, right? So you're always paying for it a month later. So we'll collect daily interest from April 7th through the end of the month. But then your first true mortgage, and that is at closing, yes. But your first true mortgage payment won't be till June 1st.
Okay. And I love that. And it's just fresh in my mind because my client he got a condo this weekend, but like you said, his lease isn't up until August 15th. And when he was thinking about offering, he was really hesitant because he felt like the timing was off. And I was like, no, this is the perfect situation. His current apartment is in like Atwood. It's going to sublease with
Yeah,
absolutely no
yeah,
problem. Yeah. And I
yeah,
was like, and like he's set to close on May 1st. So I'm not sure how that works because that's literally the first day. But I'm like, dude, you don't need to pay even your mortgage until June or
yeah,
maybe July. So
yeah,
we will get your apartment rented. Like, don't worry.
yeah. Well, he actually, in that situation, he has a choice. He can either delay that payment until July 1st, or he can make it June 1st, and then instead of paying that whole month of daily interest, we'll actually give him a credit for I guess 1 day to go back. Instead of collecting that full month of interest, we're going to give him 1 day of interest because he's going to pay that next month instead of waiting 2 months to pay.
Ah,
So
I
people,
love that.
up until I believe it's the 7th of the month or 6 days, you have where you can actually choose to do an interest credit instead of paying that full month interest. So really just depends when you want to have your first payment.
Okay. Are buyers doing adjustable rate mortgages at all this year?
I haven't seen them much, and I think it's just because the volatility of the market that people are usually just more comfortable with knowing this is what my payment's going to be. And yes, it will be cheaper for an extended period of time with a adjustable rate, but you are then at the mercy of the market when that time period runs out to either where you'll have to refinance into a conventional mortgage or you just take in whatever the rate is that day. So typically we're seeing much more just 30-year fixed mortgages.
And that makes me think of another question of like, are you having that conversation with buyers who are nervous about the higher interest rates, which honestly, they're not that high to me anymore because in 2023, we were up to the sevens like that fall. So to me, I'm like, this isn't that bad. But what is the thing you tell buyers about refinancing? Like, how easy is it to refinance? How much does that cost? How likely is it that they'll get that opportunity? Let's say they close with a 6.5 right now. Like, should they already refinance at that 5.5?
Yeah, so I think the term or the phrase date the rate and marry the home, right, is very true. Find the home you like. You can always refinance your rate later. That home a year from now is gonna be more expensive, right? And even if you wait and the rates do go down and you time it out perfectly, which is almost impossible, whatever savings you made from the lower rate will probably be negated by the increased sales price. And you're stuck with that sales price forever, right? Like that's what you paid for. So yes, I definitely stress the importance of being able to refinance down the line. What does it cost or like what's involved? Essentially, it is another set of closing costs. So just like when you purchase a home, there's a set of closing costs. We're going to do the same numbers when we refinance. The only difference is now you already have your escrow established, and your escrow is money held aside throughout the year so that we can pay your taxes and your insurance on your behalf. So that's already set up, right? When you own the home. So if you're going to refinance, now we're just charging you the fees pretty much to do the operations team and make the loan happen, the title company fees, things like that. But typically we see them be around 2,200 up to 2,800, depending on a couple different things. But what I would focus on is how much can we save you monthly, and when that determines when it makes sense for you, not just, well, the rates are 0.5% lower now. We want to be more strategic and make sure it makes sense for you.
Yeah, it's really just doing the math, isn't it?
Totally. Yeah. Yeah. And the math that makes sense for every individual. Is your number 100? Is $100 a month make sense to you? Is that what you want? Then that's exactly what we're going to target. If it's not until $300 a month, then that'll be our goal.
Okay, that makes total sense. Is there anything else you wanted to share today, Zach, for any future buyers who are looking within this next 6 to 12 months?
Yeah, I think if you can see yourself coming across a home that you love and feeling like, man, I'm ready. I want to buy this home. I want to offer on it. If you could see that being you in the next 6 months, then the time to get pre-approved is now. We can always tweak your pre-approval, update things. If you have something change in your life, we can alter your pre-approval. That's fine. The hard part is when you find that home and you haven't started any of the process yet, and now it's kind of a mad dash in hopes that it's still there once we have everything in order. So I would just hate to see somebody miss out on their dream home because of a pre-approval process. So if you can see yourself wanting to find your home in 6 months, I think the time is now to get pre-approved.
Yes, and I will add the time is now to reach out to me as well to start working with your agent so that we can plan ahead. And because myself and other agents, we all have a pulse on the market. We know what's going on. We know what listings our team, like people in our brokerage, have coming up. So it happens time and time again. I literally just had it happen a month ago where these buyers, I knew I had sent out, someone had referred me to them, but I had not heard from them yet. And I knew that they were going to possibly start looking in November. All of a sudden, they reached out to me because their dream home was listed. And luckily, they were very responsible. They were already pre-approved because they did want to understand their budget. And we put an offer in just like that. And now they've said, oh, we're not going to look again. But like, come on, if your dream home pops up again, you're probably going to be reaching out to me again.
Yeah.
Well, thank you, Zach, so much for coming on and just giving us perspective into the 2026 market from a lender's perspective. And I'll just reiterate again, what I love so much about working with Zach and Zach working with our clients is that you're so personable. They feel comfortable asking you questions. I know a lot of times it feels like my clients don't want to ask dumb questions or the wrong question when it comes to money and financing. I think a lot of us feel very triggered about talking about money, and you are very approachable. You don't make people feel that way at all. And I feel like we were so all on the same page on this last transaction. It was just like chef kiss. So thank you very much.
Well, thank you, Dana. Yeah, it's been wonderful to work together, and I think you're totally right that it's not transactional. We're not trying to be transactional and just get another deal or move on to the next. It's really this is people's lives, and it's really important stuff, and it's the biggest purchase of your life. So we're going to take time to make sure that you feel supported throughout the process, and that you do get to ask every question, and that we're available to you, when you need it. So yes, I appreciate working with you as well.
Amazing. Well, thank you, Zach. And to everybody else out there, please send me any questions. Put down in the comments any more questions you have for Zach. I'll make sure he checks back on the comments to answer them. And we'll see you on the next video.